Hello, folks. How the heck are you? Welcome back. Today is October 4th, 2025, and we're doing a quick review on the Forex market. Usual suspects are, and the usual suspects being US dollar, fiber or Euro USD, cable or pound dollar. All right. It's going to be easy to go through these because generally the market is just held in a holding pattern right now. So you can see how everything on dollar is being trapped in between this inefficiency and this inefficiency. So by grading them, you can see the pertinent levels here. I have the lowest reaching discount wick, and I only have this suspension block graded. On the right-hand side, you can see the 5-minute chart reaches up into that volume imbalance right here. I have the two dark black lines there, and I have a dashed line indicating its consequent encroachment between the two bodies. This candlestick's open, this candlestick's closed. That's what these two levels are here. You can see at the start of trading, reaches up into the volume imbalance, breaks, so there's a displacement there, trades right back out to consequent encroachment perfectly. Then we break lower, trading into the bullish fair value gap here. And then this quadrant here, we trade down into it there and then fall short of reaching consequent encroachment of the buy side imbalance, sell side efficiency, shown here at 97.58 point or 58.2. So overall, it's kind of like doing nothing. And I mentioned this earlier in the week, which is another reason why I keep telling you all that, keep saying, please talk about Forex. Please talk about Forex. If Forex is going to be doing things like this, I'm not interested in it. And it's going to make it harder for you as a student to navigate in that market because it's not highly liquid. It's not loose. It's high resistance, not low resistance liquidity runs. So it's very, very difficult for you to navigate a market like that. So I try to take your attention away from it. My attention is certainly diverted to other markets like the futures market. But moving on into Eurodollar, similar thing. We have a sell side imbalance, buy side efficiency, highest premium wick annotated there. You can see the consequent encroachment of it here at 1.17562, and the lower quadrant being at 1.17449. You can see on Friday's trading, we traded up into the 1.17562 consequent encroachment. I have it colored as purple to contrast that there. Okay, so that way you're not going to see that and think that's the same level. And then the upper quadrant coming in at 1.17449, that's it right here. So really, there's nothing in here that's all that exciting about Eurodollar. It's not moved a lot at all. I mean, it's really, really small ranges. So if you get excited around 20 handles for 20 pips, to me, it's not worth paying any mind or any attention to it. All right, moving on into cable. Now, this one has a little bit better structure. So you can see we had lower quadrant of this premium wick being measured, and I also did the lower quadrant on this one just for contrast. Okay, so as we were compressing smaller in the wicks, and then the discount wick being shown here, you can see that the low is defined by the upper quadrant of this discount wick coming in at 1.34302. That's that level right there. We have a shift in market structure. Buy side balance, sell side efficiency comes right back down into it and then rallies, leaving that, which is the high of this discount wick. And then we come right back down into it there on some more, trading into this buy side balance, sell side efficiency. Then it rallies higher. We have a breaker low, high, lower low, carry that forward. That's a breakaway gap, measuring gap, and then trading up into the quadrant 1.34864, and that's the lower quadrant of this wick here. Okay. You would still have this in here. By contrast, you can see it. So this is one objective it could reach for. So in other words, if it went to this quadrant and went higher, you would expect it to reach for that one. So that's how we work through nested or closely printed wicks that are in subsequent candles. And apart from that, it really didn't do too much at all, really. But it had a better run, about 45 handles or so, maybe 50 handles. Moving on into futures and focusing on December mini NASDAQ futures. All right, so on the left-hand side, I mentioned this on Twitter yesterday. So if you look at the posts, I didn't do any live streaming, and I mentioned what I thought was salient at the time. So buy side imbalance, sell side efficiency here, and the market was pulling back after making another higher high on a Friday. And I'm showing you Thursday's opening range, real time or regular trading hours, opening range gap rather. That's this here. So that'll look familiar. And it closed that gap there perfectly and then came right back up to it again there, came back down to consequent encroachment, rallied up into some random level in here, and then fell out of bed and then took out the intermediate term sell side liquidity pool I mentioned on Thursday's commentary. And looking at that rally, it takes us right back up into Thursday's regular trading hours opening range gap lower quadrant. So the labels here are Thursday's regular trading hours closing price, Thursday's regular trading hours opening range gap lower quadrant, consequent encroachment, upper quadrant, the opening price there based on Thursday's trading. No opening range gap is being plotted in this discussion on Friday's trading. When you have these real big wide gaps like that, you definitely want to carry them forward. And they're going to be utilized the next day, especially if you're inside the range. Between what boundaries am I referring to? Inside what range? The high and the low of that previous day's opening range gap. So just notice how the sensitivity here, like that's beautiful. It's not pivot numbers. It's not support and resistance. So dropping down into a 1 minute chart, because we were just looking at a 5-minute chart. Now we're only looking at Friday's trading. So here's first presented fair value gap there, and carrying that forward and grading it. You can see all those levels. We trade up into Thursday's regular trading hours opening range gap high, and we break down. And now refer to yesterday or October 3rd, 2025's commentary and the notes I posted in Telegram, and you'll see what these suspension blocks are. I'm not going to go over it again here, but we trade down to consequent encroachment of this discount wick, carry that forward. We trade up into first presented fair value gap, hits all the quadrant levels, consequent encroachment. We break lower. We have a bullish fair value gap that becomes an inversion fair value gap here. And again, at the regular trading hours, opening range gap, upper quadrant. Okay, I saw some people that were saying I was calling this level wrong. It's not the upper quadrant. You don't know what you're talking about. Okay, that's why I broomed you off of X. I won't look at your posts. Don't try to correct me about something I know. You're just learning about it. You're going to talk to me about what you think I'm doing wrong. I'll make mistakes, but I know what I was talking about when I was posting it. So it sells off here and trades down into the lower quadrant and then all the way back up to the higher suspension block. Now, this is shaded, not green here, like it was when I presented to you yesterday. Now it's acting as an inversion level. So it's going to be a premium array. Hits the consequent encroachment of that perfectly and sells off. Comes back up inside this one again, sells off. Inefficiency, inversion fair value gap after this fails. And when it's heavy and bearish, that's what we want to see. And I mentioned that we would see the lower quadrant and then the fair value gap. I asked on Twitter, did you have this highlighted on your daily chart? And is it graded? And we got down to lower quadrant, I'm sorry, upper quadrant rather, at 24,955. That's this level here. It trades down to here and gets very, very close to consequent encroachment, but says not today, and came off that and closed up here. TGIF conditions. We had a high of the week at 25,196.5, and the low came in at 24,633.25. That's this candlestick's wick and this candlestick's wick, making the daily range boundaries high and low. And then here is the 20% of the range. It's 25,083.75. 30% of the range of the week is 25,027.5, and then 40% was 24,971.25. And those levels here, you can see them right here. They're shortened and they don't go all the way to the hard right edge. And you can see how they were delivered too. So TGIF was delivered, actually almost went down to half the weekly range, left that portion with that candlestick's wick that opened as well. All right, so moving into the afternoon, all I did was move forward in the chart, and you can see how we came up into consequent encroachment of that suspension block that becomes an inversion level. Same here, fills that small little gap right there. It's too small for me to annotate. Breaks lower, the bodies are respecting the upper quadrant, doesn't come up to the top of this buy side imbalance, sell side efficiency. Measure your volume imbalance, and then breaks lower, hits the low of it, and then sells off. It comes right back up to that same inversion fair value gap, and then just hammers and bangs in between 40% of the weekly range and 30% of the weekly range, and the regular trading hours closing price from Thursday. And that's where it defined the range going into the close. Now, for the folks that complain and bellyache to me, please talk about Forex because you trade CFDs or Forex pairs outside of the US. I don't know why you're not doing this, okay, because you're able to follow what I'm doing in NASDAQ with US 100, okay? So if you go on to TradingView, and this is being used, and I'm not suggesting that you should open up an account or trade with this brokerage firm, but capital.com. Pull that up for the US 100 market, okay? This is the CFD version of NASDAQ futures contract. It's not going to mark to market perfectly, but I'm going to show you here that it's doing the same things I'm teaching that the futures market is doing. So instead of complaining to me and leaving comments in the sections of my video where I broom you, I make you invisible to the channel, it means I'm never going to see your comment anymore. Listen to me here, okay? Because your time with me learning will be greatly increased and be much more fruitful if you listen to what I'm going to say. Daily chart of the US 100, okay? Same thing happening here. This is TGIF. Same thing, high and low, half, 40%, 20%. It had that much of a retracement. But more specifically, first present the fair value gap. It trades up into it there, hits the quadrants, consequent encroachment, sells off. The upper quadrant of Thursday's regular trading hours opening range gap, regular trading hours opening range gap high, consequent encroachment, lower quadrant, and the low of the regular trading hours opening range gap low. Now, how am I getting those levels on US 100? Think about it. Pause the video and think about how I got those levels. Because there is no regular trading hours for a CFD. I already taught this before, but you just didn't listen. You don't listen. You don't take notes. You're so worried about what I'm going to teach new. But the things I'm jawboning about, that's the stuff where you're really learning. What you're doing is you're going to be going into 4:14 p.m. Eastern time, where that price is, annotate that with a line segment like this one here, the ray. and then label that regular trading hours closing price for whatever day it is. Okay. And when you're creating it for the next trading day. So if you're looking at it on 4:14 p.m. Eastern time on a Wednesday, you're looking at a Thursday opening range level. That's how you're going to define it. And then you're going to wait until 9:30 Eastern time the next morning. And when it opens up, that's your other reference point. So between those two reference points, that's going to be your regular trading hours opening range gap, high and low. There won't be a gap. You're just simply just going to the 1 minute candlestick for 9:30 a.m. Eastern time and 4:14 p.m. Eastern time. And you're going to get the same information that I'm showing you here. And it's the same thing that I'm teaching with the futures market. Why are you complicating everything? And you can see how we deliver down into the upper quadrant, just like I did in the futures market, calling it on X on Friday afternoon. We traded down into the upper quadrant of the buy side and balance sell side efficiency, and then it came right back off that and trading right near the regular trading hours opening range gap low from Thursday's trading. Don't just discard the previous day's opening range gaps. You're going to see that the algorithm is still using them. And because this is going to track the real futures market, where is it going to get its rhyme and reason for where it's going to go up and down? What that futures market's doing. All right, folks, that's it for this one. Hope you found it insightful. Until I talk to you next time, I wish you good luck and good trading.